All right, guys, S&P 500 SPX update today, 4164. Basically, that's where we close 1.3% gain for S&P 500 and NASDAQ 100, 2% move. Pretty big move. And before we get started, thanks for stopping by. Let's have a look what I'm looking at from here, from where we closed today. 4200 still resistance for SPX. I'm watching above. We do have that little gap area that we talked about last time. If we're gonna fill it, that's the zone I'm watching, possibly fill and then maybe reverse, because in the past S&P 500 has filled almost 100% of gap downs. So that's it's a fact that you can't argue about. So it has done it in the past. Is it gonna do it in the future? Will it do it? How soon will it do it? I don't know, but that's the little zone, another maybe 1% from here I'm watching to possibly fill if we're gonna see market melt up from here. So another level would be 4300. These are the levels to the upside, okay? But now let's jump into other stuff here. So put to call ratio for SPX still high. And yesterday, despite market was just hanging around, doing nothing yesterday, chopping around, puts were coming in. And today as well, despite market going up and down, swinging intraday 2%, we did see some decent put buying come in. But another thing is that there are some calls are being traded as well, and that's why a lot of people sometimes get confused with the VIX. I mean, VIX is basically option activity in S&P 500, so it's not. It doesn't. Here's the short. I think I looked it up here, just to show you guys in a very short sentence. It works by tracking underlying price of the S&P 500 options, not the price of S&P 500, okay? So if volume goes lower and if there's not significant difference between put to call ratio, I mean, you're not going to see VIX go crazy, okay? You might see this S&P 500 trade up and down, but if there's not much of a hedging going on, if there's not much of a put buying going on, you're not going to see the VIX go crazy. So one reason could be that people have already hedges in place. They have accumulated small chunks of hedges, and there's no urge when S&P 500, just like today, right? We got used to this kind of move, like when this move down and up, it was 2% swing down and up basically. So it's a pretty big move intraday, but market is not panicking. I mean, this flush down was bought up quickly. So that's out of the way. And what else I wanted to show? NASDAQ, the strongest sector so far. I mean, the indice this year so far, 16% gain after last year being 32%. And I basically looked up the historical returns when we had this kind of negative year, like last time 2008 and 2001, 2000, 2002. That's what a lot of people comparing to. And there's still people who believe that we might have negative 2023 and negative 2024, and basically market bottom out in 2024, not anytime soon. So there are people who are betting on that, but that's just the fact that the NASDAQ is outperforming overall so far. It's been only 1+ month, but something to keep in mind, because if you go back, take a look at the next year after basically NASDAQ bottoming out, if you look at the returns, those years are insane. If you time, every time basically, you can go as far as it existed and just take a look when it was down double digits, and very next year, returns are crazy, double digit returns. And also back to SPX, S&P 500, so far ultra short term, I'm just still watching this 5-day moving average 20-day moving average, percent of S&P 500 stocks above their 5-day moving average, above their 20-day moving average. Still low for me to say that this momentum is going to continue. It's slowing down despite overall, I mean, we're sitting at highs still, but we can just stay in this choppy zone. So that, and I'm going to show you like what stocks, just by taking a look at today's most active option activity in stocks in S&P 500, you can see that these are the stocks. As soon as these stocks take a break, you can see a pullback in overall market. So basically, Tesla, highest volume today, and what people are doing, they're still buying calls. Amazon, second highest volatile active stock, 61% of the option volume is calls. Apple, 59% calls. Microsoft, 67% calls. Today was up pretty nicely, 4%, 4.2%. Nvidia, still going up on that AI news. Pretty much hype. It's not dying down anytime soon. So it's up 5%. 58% of the option volume was calls. And Google did very well as well. Same thing. AI news, 4.6% gain today alone. 72% of the options were calls. Meta, 60% of the options were calls. AMD, 56%. So anytime these like large cap names that we have so far, I mean, these are all like all of the $1 trillion market cap stocks are here basically. And anytime these stocks take a break, you will see market pullback. But so far, market is holding up because of these stocks, and they're contributing a lot because S&P 500 is market cap weighted. So far, relative strength, like I was just looking at today what sectors were doing, you can see, I mean, technology 2.3% still, communication services, energy, people bought the dip in energy, but in energy, there is a bit of a divergence between crude prices. It's been for quite some time actually. So one thing is going to give for sure, either crude will flush down or it will pop all the way back to 90 to catch up with energy stocks, right? XLE, you can see it's still not too far away from its all-time highs. Today it was up 3.2%. I mean, crude was up as well, but if you just overlay XLE and crude oil, you'll see the divergence pretty much beginning from August, I believe. What else I want to show you guys here? I want to show you the heat map for just today, just to visualize like what's going on. And the bigger the squares are here, the bigger the market capitalization of that stock. And you can see, despite like so many sectors being negative to flat, it took a few of these names to basically carry the market. And another thing, not only Nvidia, but pretty much the entire semiconductor sector was basically green as well today, and it contributed a lot. I follow SOX as a semiconductor ETF, and it's, man, if you measure just from the bottom of the this ETF, I mean, it's technically speaking in a new bull market. Same thing you can say with NASDAQ, but it depends, right? So far, you can see at the moment where like at 12, we need like 100 points from here for NASDAQ to be officially back in bull market, because I mean, technically speaking, that's what a lot of people label as a new bull market. Anytime any particular stock index moves 20% from its bottom, it's considered like new bull market, right? Of course, there were times it was a fake out, but technically speaking, we're very close. So this purple line on my chart, that's the perfect 20% mark that I'm watching. So basically, if NASDAQ gets above 12,850 or so, pretty close this area, I'm watching basically this level to hold and maybe to possibly look for some dip opportunities, because so far, I mean, there's no reason to short it, because one rule is when it comes to shorting, you short it when it cracks. So far, there's not much. One thing, well, I just want to thank this guy who put together all this, John Butters. He's a FactSet analyst. S&P 500, this blue chart right here is S&P 500's price action, and this black line here represents earnings per share for S&P 500 for the past 10 years. Okay, and you can see from the beginning of 2020, you can see it right here, from the beginning of 2022, you saw a decline, earnings per share decline. But if you compare it to 2020 and 2019, we're still significantly higher. And for those people who think that SPX S&P 500 should come back down to 2019 highs, I mean, you gotta follow the earnings basically. If earnings keep declining, I mean, technically it's still declining right here, right now, then maybe you might bet that as we're gonna put in stock market new lows, which would be maybe not in Q1, maybe next quarter when companies report earnings. Because so far, I'm not gonna read through everything. 70% of the S&P 500 companies have reported positive earnings per share, and 61% of companies have reported positive revenue. So far, I mean, there's no sign of a crack. There's sign of a maybe slowdown in terms of, but it's not like significant. I want to say 5% decline year over year, versus if you look at the gain in the past like 2 years, I mean, we're up significantly. Companies are still banking. I mean, you can just dig through this data. I'm just throwing it out there for those people who are like super bearish and betting crazy. This is another thing a lot of people run with, price to earnings ratio of S&P 500. And this is Shiller PE, which is adjusted to inflation. And a lot of people just bring up this chart and say, well, PE is super high. I mean, historical norm for a lot of people is in the range of 15 to 20, but we are currently sitting at 30. But hey, I mean, companies are making more money, so I mean, why not, right? PE. But again, it's for those people who are super into fundamentals. You're gonna crunch the numbers, and whatever you are comfortable with, whatever you believe in, that's where you put your money. But ultra short term, yes, I mean, momentum is slowing, that's for sure, but it doesn't mean that S&P can go higher, much higher than where we are sitting right here, right now. Percent of stocks above their 200-day moving average, 71%. Above their 100%, 82%. Above their 50-day moving average is 71%. So still decent numbers. One thing I was just testing, it's for those people who may be interested to, like, if you're trading SPX or SPY, maybe you're gonna zoom into what's going on with 5-day simple moving average. So I was testing it today when I was trading it. I basically went and looked at it ultra short term, basically percent of S&P 500 stocks above their 5-day moving average. Like 10 a.m. in the morning, it was hitting 17. And basically I zoomed out from here to 3 months, 4 months, 6 months, and looked at the S&P 500 stocks basically below 15%. So basically 15% of S&P 500 stocks were above their 5%, 5-day moving average. and I went back and put it over the SPX, and I did place a couple of trades just based on that, because you can see every time that happened, it was pretty much, I mean, so far I didn't go too far. Every time it was sitting so low, we saw S&P 500 try to push higher, at least pop. Okay, of course it did roll over here, it did try to go higher and then roll over, but here it just straight come down. But if you look at it percent of the times after stocks in S&P 500 were like only 15% of the S&P 500 above 5%, I mean, it did pop pretty nicely. So, and that's what was happening intraday. Okay, like I was watching actually on a daily, basically I was watching, and then that 2% move came in pretty big today. So I did place a couple of trades, but I don't have a position overnight right now. So, but that's the video for going forward. I'm not bearish, I'm not super bullish. It can definitely chop, and see you in the next update. So that's the video. Thanks for watching. Take care. Peace.